Hi everyone and welcome to this lesson on stop losses and placing trades. We're going to look at why it's important to use a stop loss, how to use them, and also going to look at different ways of placing trades. Okay, so let's get straight into this and have a look. So what is a stop loss and why do we use them? So a stop loss is used to limit your loss. It's to protect your account equity. It's really important to do. We always recommend risking a maximum of 3%. The lower the better though. Okay. Using a stop loss is a must. Without one, you will blow your account. Okay, so on the right hand side here, we've got this trade that say we've entered for a sell position here, and we want the market to come down. Now our stop loss is just here, the top of this red rectangle. Now, if we didn't have this and this market went against us, then we're gonna blow our account essentially. Okay, so we do have to be careful, and that's why we're going to use a stop loss. You don't have to monitor the trade once you've got a stop loss, okay? Because you know the worst that's going to happen is it's going to hit your stop loss. Now, if you're holding over the weekend and the market gaps, it's different, but you're going to have a wider stop loss. Now, I always recommend closing trades for the weekend, okay? Because you can avoid having those huge gaps in the market. Because what you don't want is on a Friday, you've got a trade running. On Saturday, Sunday, there's a huge oil spill, and the price of oil suddenly rockets because there's less of it. Okay, less of it. So the price of oil will go up. So if you're in a sell position on oil, you're going to be in big trouble. So I'd always say, don't hold over the weekend, unless you've got a real wide stop loss. Okay, so you can learn about that in the swing trading system. A stop loss allows decision making to be free from any emotional influences. Okay, so once you've got this stop loss set, it stays there. You leave that stop loss alone. You know then that you've done your bit, you've done your work, you've analysed the market, and this is where you feel is a perfect place to put your stop, and you're happy if you get stopped out. So it just takes that emotion out. And one thing I always say is, don't start moving your stop loss around. Okay, there is another way you can set a stop loss, and that's using a trailing stop. Now, the way that this works is if this market here starts coming down, your stop loss will follow, just depending on the parameters you've set. Stay a certain distance away. But if the market comes back up, the trailing stop will stay in the same place. Okay, so if this market comes to here and your trailing stop comes to here, it won't go back up, it'll stay there. And then if your market comes down, it'll follow it down, okay? Which is a good way of locking in profit, but it also means that you could get stopped out of a trade too early. Okay, let's go and have a little look at how we can how we set a stop loss. Okay, so let's just go onto this market here, New Zealand dollar, US dollar. Just using a demo account to show you how to do this. Okay, so we use this little plus sign here to open the order box. Now, all we're going to do is we're just going to set an instant execution. We're going to talk about different ways of entering trades in a minute, but for now, just to keep things simple, just a nice simple instant execution, and I'm just going to show you how we can go about entering this trade. So just say, for instance, we're going for a buy. Okay, first thing you do is set the direction you want to go. You then set your stop loss. You've got a trailing stop loss here, and you've got your normal stop loss here. So you have that selected, okay? And then, as you can see us here, so if we've got the stop loss, let's set the stop loss. Let's just say we're going to set it at 64,734. Okay, we're just going to set that there. We're looking to buy the markets. We want the market to go up. What we can see here is our risk, £4.50, okay? As we adjust the volume, so this should be the last thing you adjust is the volume. You can see your risk here is adjusting. So that means, so if we've got, if we're risking 3 lots, okay, That's £330. That's a maximum loss you can get on that trade. For a sell, it's just the opposite. So if we're selling the market, we're going to place a stop loss. Say we're going to place it at 65,127. Okay, and we've got this selected, and if we adjust this, you'll notice this area here changes. Okay, it's a risk. So then all we do is just place a sell. Confirm. Yes, you'll see on the chart. Here's your stop loss. Here's your entry, and this is your trade and what it's running at. Okay, now if this was a trailing stop, as this comes down, this stop loss will follow. You can manually change your stop loss as well. Just pulling it down like that. So if the market goes down and you want to follow it down, you can do that. Absolutely fine. So that's pretty much it on stop losses. It's really simple, but it's also incredibly important that you use a stop loss. Okay, so let's go back and have a little look at different ways to enter a trade. So there's 4 ways we can look at it. Well, there's 5 ways, sorry, and there's your buys and your sells. So first of all, we've got a buy stop order. This means taking advantage of the current trend and momentum. We've got a buy limit order, looking to catch market reversals. We've got instant execution, so we're taking the price that is on the chart at that current time. We've got sell stop, and we're taking advantage of the current trend and momentum for sales. And we've got the sell limit order, looking to catch market reversals. So here's an example of a buy stop. So we have the market coming up in price. Okay, so we've got this is a current market price, say for $20. Imagine this being oil. And what we want to do is, if this market comes up, we want to be catching that momentum, that trend. So we're going to set a buy stop just above at the $22. So should that market come up, it will open this trade. Okay. Sell stop is just the opposite. If it comes down and we want to put a sell order in, this is a current price, and we say, right, we're going to sell if it gets to $18. So if that market comes down and executes, perfect, we can go with that trend. Now, a buy limit order, it's where if the current price is $20, okay, and you place a buy order below the current price. So what you're looking for the market to do, which I wouldn't always advise, I'd be very careful of this, is you want the price to come down, touch off, and then go in the direction of your trade, which would be upwards. You would want it to go up. And a sell limit is just the opposite to that. So you're looking to sell the market. Current price is $20, but you're saying, I want price to come up to $22, and then I want it to go back down. Okay, so you're trying to catch that turning point in a move. How do we set these orders? Well, these are really simple as well. So when we come on to XTB, we go to pending order. Okay. We tick stop loss because we're going to use a stop loss every time we trade. We then select the price that we want to enter at. So if we're looking to buy this market, say we want to catch any upward momentum, we could enter this at 649. Let's go with... Let's just go with really high, 60. Let's go with 65, 0.65. And we're going to place our stop loss just anywhere down below. Okay, and then here's our risk, and we can adjust our risk with the volume, what we're going to place on the trade. So this is a buy stop. We want the current trend to continue. I'm just going to close that trade out there so we don't get confused with the lines. Okay, so should this price continue up, our trade will execute once we touch this area here. Okay, and then our stop loss will also come into play. So the opposite is true for a sell order. Let's just let's delete this order. So if we're going to place a sell, we click the plus. pending order, we place a price that we want below the market price. Stop loss, we put the stop loss above, and then we can adjust our risk. Place a sell, yes. Now the sell order is for below the market price, okay? So if that market starts turning down, we're catching momentum on the way down. Right, okay, so the next type of order is we could look at placing a buy limit order. Tick our stop loss. We're looking at a buy, so our stop loss will be lower than the market, okay? And we're going to put the buy order, the buy limit, below the current market price. So what we want price to do here is come back down, touch off our area, and then go back up. So we've got our risk here, £125, okay? And this is our area. If that price comes back down, touches that, it will execute that trade and we'll look for the market to continue upwards. So it's slightly different. So before, if you remember, our buy stop was up here and it would have executed on the way up. Here we want price to come back down and then continue in the direction of the trade. Okay, and the final one, I'm not sure if I've done the instant execution. I'll go over that again if I haven't. So our final one is a sell limit. So if we want this market, if this market's coming, if we're looking for this to come down, okay, what this is going to do is we set this here. So we could set a sell limit up here and we're trying to catch a part of the move and then for it to reverse. So we're going to go with it here, get our stop loss on, okay. Stop loss again is going to be where are we? Stop loss, we've got sell, there we go. Wasn't sure why that wasn't working. This needs to be above the execution price, okay. And then we've got our risk here, so we could just go for that. And we click sell limit. Okay, so what's going to happen here? If this price comes up to here, touches here, it will execute this. Our stop loss will be active, and we want the price to come back down. Okay, so I believe it's a lot more risky for this to happen. So for example here, you could have set a sell limit here. It's come up and then reversed, but it's a lot harder to catch that. And I prefer to actually use the buy stop and the sell stop and be in the momentum. Yeah, it's a lot better and it's a lot more successful, I find. So that's it, guys. I've covered everything there. Oh, one more thing actually is the instant execution. In case I didn't do it, it's really simple. You've already seen that with just setting a stop loss, I believe, a minute ago. It's really, really simple. We come on, we set our stop loss. If we're looking to buy the market, okay, there's no price. You don't have to put in your price because it's going to take this price. Okay, so it will open straight away. We set our stop loss. Say we're looking to put that lower. We've got our risk here. Say we want to risk 100. Okay, we just adjust this necessarily just like that. So we've got £106 risk. Place a buy. There we go. Straight in the market. Trade is open. Stop loss is here. And it's as simple as that. Right, that's it for the lesson, guys. I hope you've enjoyed that and I hope you've learned something. And I'll see you on the next lesson.